Hello everyone, this afternoon on the marketplace, Ghana Chamber of Bulk Oil Distributors reacts to one Cedi tax charge on fuel. I'll be speaking with the CEO, Dr. Patrick Kufori. Also coming up, Ghana's currency circulation climbs to 71 billion cedis in 2024. My name is Darryl Kwal. Thanks for being with us. Details coming up. All right, thanks for staying with us, everyone. Government's decision to impose a 1 Cedi charge on every liter of fuel purchase, critics say, will further burden consumers already grappling with rising costs. Joining me to discuss the implications of this new levy is the CEO of the Ghana Chamber of Bulk Oil Distributors, Dr. Patrick Kufori, as we try to gain more insight into how this decision could impact fuel prices, the distribution chain, and the broader economy. Thanks so much for joining us, Dr. Kufori. So what is the Chamber's official position on the energy sector levy, that is the 1 Cedi addition?
Thank you very much for this opportunity. As a chamber, collectively, we are not against government decision to levy any particular product or any particular services that is being rendered in country. But our main issue has been somehow the inadequate engagement or consultations that didn't take place before that. But we also appreciate the exigencies of the time and government quest to immediately plug in a revenue shortfall, which may be coming from other decisions that maybe government have taken with regards to other taxes in other sectors, and also with regards to a revenue shortfall due to maybe the appreciation of the cedi against especially the custom duties that they were expecting, and even against petroleum revenue that they expect to receive from the upstream. So in principle, they are managing the economy and they know what they need to do at a certain point in time. But what we normally will request is, if we were in the known, there are other aspects that we could have even made a contribution. Why should government, going through all these difficulties, continue to invest in subsidizing premix fuel? Why is it that other products like the marine gas oil are not also being taxed up to a certain level? When you look at the data for MGO consumption in 2023 and 2024, clearly it gives a clear indication that some of these products and the premix find themselves into our filling stations. And that creates a whole lot of issues. And because the tax component on these products are not as aggressive as the one on the liquid, on the other white products, the normal diesel and the petrol that you and I consume on a frequent basis. So these are some of the things that we were hoping that through our engagement and then also perusing the data, we could have also made some significant contribution so that we all can have our lights on, and we also can also have our peace of mind as downstream operators, especially when those who have really been impacted are members based on government frequent cargoes for VRA, which has culminated in losses to our members incurring serious amount of millions of dollars in demurrages. We hope that with this, they will be able to pay ENI and other gas supplies so that we can have gas upstream, and then we can also have the CBM free so that we can follow the Lacan schedule without any form of distraction.
Yeah, I would like us to talk a little bit more about the impact on your members. I mean, when you speak to the oil marketing companies, they talk about how this is going to build up the cost, not just only to customers or consumers, but on the operations as well. What do you anticipate would be the impact of this on your members?
You look at how it is structured. Government revenues within the downstream does not necessarily sit with the BDCs or those who import it. It's at the retail end. That is where the OMCs will talk about their margins being shrink, because their overhead costs will go up. But even that, if you are to look into it critically with an objective mindset, there are some of them based on the competition that exists within the space. It's not all of them that will be bold enough to pass all the 1 cedi on to the consumer. Some of them are likely going to absorb portions of it, and then others may also push partly on there. We all look to see what happens in the next window and how the international prices also perform. And then also the strength of the currency will be a critical aspect. With the levy itself, or like I was saying, based on the consultation, what we're looking for is maybe a caveat whereby international price, when international price rise beyond, let's say, $750 per metric ton, and then maybe the exchange rate hit maybe 11.5 and above, the 1 cedi goes away also, so that we know that we are operating in somehow a predictable frame, and that if you are coming up with any hedging or any form of future market participation, you can be rest assured how you can cushion yourself. Obviously, the OMCs may have a point with regards to their margins, but in all certainty, they will definitely be guaranteed some form of a margin. And that is the more reason why we all collectively need to join hands to ensure that some of the unhealthy competition, especially with the NGOs and the premiums finding themselves in some of these filling stations, that gives them undue advantage for them to massage the selling price. If we are to strike out that, the competition will be healthier for those who are doing genuine business to be able to know how to accommodate the tax from their P&L and see how best they can go about it and still keep their overheads within their costs, and at least make some margins to ensure the sustainability of the sector. So it's a bit of a chicken and egg situation, but there is overall some wisdom in some of the issues that they are raising.
A chicken and egg situation, you say. Again, do you anticipate any shifts in the market as a result of this new levy?
I don't necessarily think so. It's not something that will cause any market shift. You look at the discussion around the cheaper fuel. There hasn't been any major investment, especially those who are using maybe e-vehicles or those who are using other alternative form of energy. The infrastructure has not been developed that much in that part of the world. So it's not going to shape the market into a certain, but maybe within the upper tier and the lower tier OMCs, they may likely push some people within the realm of purchasing from, not necessarily the high-end ones who overheads are high, and as a result of that may want to push the whole 1 cedi to the consumer. So that is what most likely going to happen, but not necessarily a market shift that like moving people from, let's say, white products to, let's say, using LPG as a means of their gas to power their engines, or moving to EV vehicles, which has not necessarily been popularized in our part of the world.
Yeah, and when you talk about EVs, I just wanted to ask a question about carbon footprints, because also we ended days where we talk about sustainability. Considering the chamber's carbon footprints, what are you doing to mitigate the impact of carbon emissions?
As a chamber, we've made a significant contribution towards the development of the Ghana carbon market framework, as the GCMF Act 1124 in 2024, which established the Ghana Carbon Market Office. We are also in partnership with other industry players towards the implementation of the national determined contributions and to address the necessary changes that need to come with regards to climate change. As a chamber, we're fully aware of our contribution to this, and past 2 or 3 years, we've taken it upon ourselves that annually we invest in afforestation programs and activities to ensure that we take into consideration measures and activities that will ensure that we also help sustain the environment.
Thank you so much.
With this and some of our members' investment in the gas spheres, we hope to improve our footprint.
Dr. Patrick Ofori, Chief Executive, Ghana Chamber of Bulk Oil Distributors, appreciate your time.